Welcome back to the channel. Today we're diving deep into the latest developments surrounding Lucid Motors. There are some notable market movements happening right now, and Lucid is definitely in the spotlight for several reasons. We'll walk through the most recent trading data, look at the short interest, discuss broader market dynamics, and consider what might be next for this EV player. So grab a coffee and let's get into it. To begin with, Lucid shares are currently down by 2.56%, sitting at around $2.61. The day's trading range fluctuated between a low of $2.52 and a high that didn't quite gain any serious ground. Notably, trading volume was relatively light, around 72 million shares exchanged hands, which is quite a bit lower than the usual average of 108 million. What's also interesting here is that much of this activity appears to be algorithmically driven. If you've been watching the intraday charts, the barcoding patterns, those sharp ups and downs, are a telltale sign of algo trading rather than institutional moves. Now, here's where things get a little murky. Despite most transactions on the secondary market showing as buys, institutional investors aren't pouring into Lucid like some might have expected. The volume is simply not indicating strong hands jumping in. One of the big stories of the day didn't even come from Lucid itself. Instead, during pre-market hours, Donald Trump stirred the pot by taking a swing at Apple and threatening the European Union with a whopping 50% tariff starting June 1st. This rattled markets a bit early on, but many believe it's just one of those pressure tactics we've seen before. Historically, Trump's bold claims are sometimes rolled back or revised, so the market appears to be taking a wait-and-see approach. Despite broader markets beginning to recover through the day, Lucid is still trailing behind. Even Tesla managed to flip green with a slight 0.1% gain, and while Rivian dropped 1.13%, Lucid is underperforming both. What's holding Lucid back? Well, it seems the short sellers are back at it again. At the time of this recording, Lucid's short interest has grown by about 2.48 million shares. That brings the total shorted portion of the free float to 28.81%, which equates to a massive 355.28 million shares. So what does that mean? In simple terms, it looks like there's an organized effort to pressure Lucid stock lower from a technical perspective. This behavior is especially strange considering it's right before a long weekend, a time when shorts typically buy back shares to avoid incurring unnecessary borrowing fees. But today's move breaks the pattern. It's highly unusual, and it suggests a calculated effort to push Lucid lower on the charts. And it's worth noting there's been no major Lucid-related news to trigger this drop. It's mostly just reflecting general market sentiment and piggybacking on external headlines. Though, we did see a few images released by Lucid Oasis from the Geneva Open, which could hint at some kind of branding or marketing effort. However, it didn't come with any formal ambassador announcement, which many were hoping for. This absence of high-profile promotional efforts might be one of the reasons shorts feel emboldened. CEO Peter Rawlinson had previously set expectations for more test drives of the Gravity SUV, an aggressive marketing push, and a significant ambassador reveal. So far, those plans seem to be delayed, and the market has noticed. Still, those Geneva images show Lucid is active in the background. We just haven't seen those actions translate into broader public engagement or shareholder confidence yet. Hopefully, more content and announcements will surface in the coming days. Now, let's pivot to the options data, which tells another important part of the story. Right now, we're seeing 832K call options compared to 426K puts. That's a bearish tilt, with around 57% of all current options showing negative sentiment, and the bulk of those were initiated within the past hour. A huge portion of this activity is targeting the $2.50 put contracts for June 20th, 2025, just 28 days from now. That's a strong indication that traders are betting Lucid could dip even lower in the near term. Zooming out a bit, this bearish outlook isn't unique to Lucid. Large institutions have been wagering against the market in general. Just recently, we saw close to $1.9 million in institutional premiums placed on options, betting that Lucid could fall below $1.50 by 2027. That's a staggering bet and shows a longer-term skepticism about the company's growth prospects. A lot of people believe that this June 20th options expiration date could be strategically connected to the upcoming Federal Reserve meeting, another potential market-moving event. Now, looking ahead to next week, bulls are hoping Lucid can regain strength and move back toward the $3 range, while bears are gunning for it to fall below $2.50. Open interest levels support this tug-of-war, with 3K contracts sitting at the $2.50 strike price and a hefty 32K contracts at the $3 strike. Had Lucid been able to close above $3 this week, we might have seen a mini gamma squeeze play out, giving the stock some real momentum. Unfortunately, that didn't happen, so the immediate goal for bulls is to keep Lucid above $2.50 heading into next week. In terms of support and resistance, $2.53 has emerged as a key support level. Lucid bounced off that area earlier today, giving us a signal that buyers are willing to step in around that zone. On the flip side, $2.62 appears to be the next resistance mark, and that was today's ceiling. So we're currently caught in a narrow trading band between those two levels. There haven't been any new analyst updates or price targets issued recently, so there's not much fresh sentiment from Wall Street to go off of. But from a technical standpoint, this is where things get critical. Lucid has been hovering between its 200-day and 100-day moving averages for a while, but today marks a breakdown below the 100-day level. That's significant because the next key level down is the 50-day moving average, currently sitting at $2.46. Historically, whenever Lucid has broken above or below this level, the stock has experienced a large swing, often around 30%. So it's very possible that short sellers are deliberately targeting that level in hopes of triggering a larger sell-off. If Lucid breaks below that $2.46 line, it could open the door for more downside pressure. So what do you think is going on here? Why are shorts so determined to drag Lucid down? In past videos, I speculated that it could have something to do with Peter Rawlinson. Maybe he rubbed the wrong people the wrong way. But now that he's no longer at the helm, maybe it's not personal. Maybe it's geopolitical. There's speculation that some institutions might be targeting Lucid due to its backing by Saudi Arabia's public investment fund PIF. That could make Lucid a political football in a much larger game. We'll probably get more answers once the new SEC transparency rules go into effect. These rules will require more disclosure about short positions, which means we might soon find out exactly who's betting against Lucid and why. Whether it's fear of a competitor to Tesla or something more complex, time will tell. Let me know what you think down in the comments. If you found this video helpful, please give it a thumbs up and consider subscribing to the channel. Your support helps us continue to bring you in-depth market analysis. Thanks for watching, and I'll see you in the next video. Take care.